FNB released their annual financial results for the 12 months ended June 2021. The bank reported normalized earnings of 16.3 billion rand. That's an improvement of 33% on the year prior. It notes that advances declined in the period on the back of lower risk appetite and generally lower demand given the impact of COVID-19 on its customers. However, the bank did see a sizable increase in the rate of savings among its customers, reporting deposit growth up 7%, while a key metric for the bank, that is return on equity, rose to 33.3%. Well, to take us through their results and how their operations have been faring, I'm joined by Jacques Celliers. He's the CEO at FNB. Thank you very much, Jacques, for joining us. Now, I suppose in the period under review, there have been major developments in the performance of the economy that will have reflected in your performance. Just take us through that transition and how that's manifested for FNB.
Well, thanks for the time, and hi to the listeners. I mean, what a special day for us, actually. Very grateful that we were able to navigate, I guess, 18 months or so of a very challenging environment, lots of uncertainty. And today, from a first-hand perspective, to have declared our biggest 6-month dividend in our history is a very special place for us from which to go into the next cycle. And during this time, we did two things right. I think we were able to keep our core customer base going. We were able to grow into that client base, and we were grateful for their ability to have ultimately navigated the complexity of COVID. You know, they've had to make plan A, plan B, plan C, plan D, and so you go. And so it's just an unbelievable appreciation for their resilience. And then at the same time, we've had to reconfigure lots of what we've done, value propositions, and we are very well positioned for this next phase, if we can call it the spring phase, where sort of general agenda is that volumes are returning and have returned back to sort of pre-COVID levels for us. And we're well positioned with a good balance sheet and lots of liquidity and capital to support our clients as they grow into this new post-vaccine stage, which we're hoping that the social enthusiasm out there is going to get some growth. So it's a good place for us to be in.
Yeah, good start. Now, Jacques, there's been a lot of financial insecurity, of course, what with the economic impact of COVID-19. So what's been FNB's story around the issues of non-performing loans, bad debt, etc., etc.?
Yeah, so when we set out the previous last financial year, we had to take a lot of provisions for forward-looking, expectations of the market. And as it turned out, this time around, the market has impressed us. It's outperformed our expectations. And so as a consequence, our ability to have, to have supported our clients with those relief measures we put in place, for the credit relief, the restructurings. We took about 700,000 transactions, credit agreements that we have had to reconfigure and restructure for customers. And it was a very pleasing outcome that actually people have been able to get themselves back on their feet and restructured their financial affairs. There are a few sectors that are still very challenged. As you know, tourism is an example, hospitality, there are still support needed. So we're not over or out of the woods, but luckily some other sectors that really outperformed. The agricultural sector and the mining sector, as you all know, and retailing has been doing very well. So it's not the same for all, but by and large, our client base got themselves through with all of our support, obviously, in addition to what they've been able to navigate themselves through this period, and it sets them up well for the future.
Yeah. Now, of course, like you say, it is a process, to the economy getting back to full swing and so on and so forth. But despite the low interest rate environment, you do report that your advances actually declined. What's your sense around when that will start picking up again? And to what extent was that story about your risk aversion as a bank as well?
Yeah, it was a period in which, normally you could expect the growth agenda for an organization like ours. Ours wasn't focused on growth this last period. It was focused on relief and helping our customers get through the cycle. So lots of restructuring, lots of support for customers. And always knowing that if we did a proper job at retaining our clients, restructuring their affairs, making sure that they can get through it, that we will be there for them as they can then participate in the economy again. So our agenda shifts from this relief agenda and support agenda into now a growth phase. And so you could expect lots of, more focused growth agenda at the moment into the next. And it's already pleasing that over the last quarter, our numbers are suggesting that the growth agenda is back on track. It's not, I guess, out of sync with the economy. The economy will struggle to go back, into sort of that trajectory it was without the structural stuff that we still need. But at least we are able to sort of tick over and make sure that we get some growth back in job business. But you're right. It was a phase of conservative restructuring, making sure we look after people and our businesses, and now it's into this growth agenda.
One last quick one, Jacques. You've talked about the extent to which your digital footprint has grown, of course accelerated by the COVID-19 situation. Does that have any immediate implications for your bricks and mortar footprint?
No, we're delighted about that. Think about our digital platform as something that's available in our bricks and mortar. So it's a little bit like, the Uber app helps the driver, right? And whether the driver is inside your branch or it's, on the street, they are able to be heroes in front of their clients. So our investment on the ground in human infrastructure, you'll see lots of refreshed branches, community branches. We are putting skills on the ground, and they are all supported with very, very sophisticated digital platforms. So it makes that storyline that people always say, are you digital or are you physical? We don't have that construct anymore. We are, everything's on platform, whether you're helping yourself or whether one of our employees are helping you, and whether you're at your home or your office or in one of our branches, it's the same tool set. And that ultimately is very, very efficient. It's scalable. We're not constrained with the physical environments, and, even things like power outages. There was a time where a mall goes down and customers are inconvenienced. Nowadays, we're really able to keep the production up despite all the disruption. So it's an exciting stage for us. And the digital platforms and the maturity that we've got in those over the last decades of investment has really set us up well for a fit-for-purpose value prop that both retail and commercial customers are looking for at the moment. And that's fueling lots of our growth at the moment.
Jacques, thank you very much for your time, sir, and giving us the background to those numbers. That was Jacques Celliers. He's the CEO at FNB.